Today we're going to talk about the blue chip tokens I believe in the most. We are going to take a step away from the noise in the market because no one knows exactly what's going on. And what I'm going to do is I'm going to walk you through real progress, real updates from 4 core names in my blue chip basket right now. And at the very end, I'll share a newer project I've been watching quietly. I love their marketing strategy. The names behind this project are huge. They sit at the edge of AI and agentic finance, which we know are the future. Anyway, today's goal is simple. We're going to break down what each project has actually been doing in simple language, and I'm going to walk you through the most important updates. And then I'll let you know why I believe these projects have huge potential in this next phase of the market, when the market finally starts pumping again. So, all right, let's get into it. All right, so we're going to get started with one of my favorite blue chip tokens, and that is SUI. SUI is a layer 1, and it was built to make crypto feel closer to that of normal apps that we can get on the Android store or in Apple's App Store. And to understand its purpose, think of gaming, consumer apps, and DeFi that actually feel instant and cheap and easy to use, instead of the clunky and slow Web3 apps that many of us that are native crypto users have seen around. But the big question has always been the same. Are people actually going to use your app? Well, in October, SUI's DeFi ecosystem hit around $2.6 billion in TVL. That's strong growth. And it comes with over $150 billion in cumulative DEX volume and healthy daily transactions. Projects like SuiLend, Navi, and Momentum are driving that activity too. So we now have a SUI that's moved past its cool white paper phase and a SUI that has real capital and users pressing buttons on chain. Then there is the stablecoin story. Between August and September of this year, SUI processed over $400 billion in stablecoin transfer volume. And this happened before it even had its own stablecoin. And in November, they announced USD SUI, a native digital dollar issued through Bridge, a company Stripe acquired. So now you have a Stripe-connected stablecoin wired directly into SUI wallets, DeFi, and payments. Revenue from that coin is designed to circle back into grants and builder programs. I love the design. So this is precisely the kind of foundation that can support serious payments and DeFi flows. And to top things off, SUI just got its first leveraged ETF, 21 shares listed TXXS on NASDAQ, a 2x leveraged SUI product for traditional investors. If you've been around, you would know very few assets in the crypto space have leveraged ETFs on major US exchanges. So when SUI joins that list, it tells you institutions see this ecosystem as worth building products around. And there is still yet another angle forming. SUI and its data layer Walrus, a project I love so much as well, are being used by projects like Telus, Atoma, and Inflective AI as infrastructure for AI agents and data markets. Cheap transactions, high throughput, and a dedicated data layer position SUI as a possible base for AI-driven on-chain economies, not only DeFi. So when I look at SUI as a blue chip style hold, I see 3 pillars lining up. On the one hand, or number 1, we have real DeFi usage right now, a serious stablecoin foundation tied into Stripe, and early moves into AI and data infrastructure. SUI is not just pitching a story. It's not just a hot narrative. It is quietly becoming a network where usage, payments, and next cycle narratives can all live together and thrive together. Next up, we have Solana. And Solana is the high throughput chain that has become a home for high velocity activity. Trading, payments, consumer apps, NFTs, all running on cheap block space at serious scale. But let's kick things off with the ETFs. In late October, Bitwise launched BSOL, the first spot Solana ETF in the US. They slipped it through during the SEC shutdown, and it paid off. Strategic. Around $420 million flowed in during the first week. And that move kicked off a mini arms race. Grayscale, VanEck, Fidelity, Invesco, and others rushed in to file their own Solana products as well. And by late November, we saw that Solana ETFs had logged almost 3 weeks of steady net inflows, heading toward around $900 million in assets, while some Bitcoin and Ethereum funds were seeing outflows. And Wall Street, we see, is treating Solana as a core asset as well, not just as a side bet. But let's take a look at payments now, because Shopify merchants can plug in Solana Pay and accept USDC on Solana with the checkout flow they already understand and that it's already familiar to them. Visa is also using USDC on Solana for settlement, and Stripe is rolling out stablecoin support so merchants in over 140 countries can accept USDC on Solana and settle in fiat, which is truly essential in order for Web3 technology and payments rails to actually be used by the masses, by old merchants. Because crypto is a little clunky, it's a little tricky, a little techy, and the world needs support. They need an onboarding ramp, right? Which is in many ways what my channel is dedicated to be an educational source that people can come and where they can learn crypto in an easy to understand way. So I am very happy to hear that Solana is offering this support to merchants globally. Anyway, all of this that I just shared turns the Solana is fast meme into something far more important. It becomes a real world payment rail for digital dollars. And if we zoom out or take a step back, as I like to always say and do, we can see the network's health. We're talking about billions of dollars in DeFi TVL, billions in daily DEX volume, and millions in active addresses and tens of millions in transactions every single day. These are the numbers you expect from a live financial network, not a speculative ghost chain. And then, of course, there is the hardware moat. Solana's mobile second-generation Seeker phone shipped over 150,000 units to users in more than 50 countries. The phone is built to make Solana usage feel native. Wallets, dApps, identity, they're all integrated into their phone. So this turns a huge group of people into Solana-first users by default, which overall, as a marketer, I feel like is a bit of an upstream battle. They did ship quite a few thousand phones out to their users, so that's good. But it's hard to reinvent the wheel. And right now, the dominant phones in the market are iPhones and Androids. So I do see this as an aggressive and strategic and clever marketing method in getting Solana products immediately to the user through their phone because they're built in. But I do see it as a bit of an uphill battle. It would be far better for them to make deals with Apple and Android to get their wallet built in natively or any of their other products that they want to roll out in masses. That would be better. But of course, those relationships are also a little difficult sometimes to secure. But Solana's huge. So I don't see why they couldn't make those relationships and get these sorts of integrations made. But anyway, just my 2 cents from a marketing standpoint. And then finally, the last thing I want to cover is their protocol resilience. Firedancer, the high-performance validator client built by Jump Crypto, is already securing around 1/5 of Solana's take through a growing set of validators. Multi-client architectures matter when you think about decades of uptime and global scale. It reduces single-client risk and keeps performance on track. So when I look at Solana from a portfolio perspective, the picture is clear. You have so much going for Solana. On the one hand, they have ETF inflows from traditional finance. Then they have real-world payments with Visa, Stripe, and Shopify. Then they also have daily usage at internet scale and hardware shipping around the world through their phones in as much of an uphill battle as I think that may truly be. And actually, on this note, perhaps I should do a deep dive just on Solana's phones, because as Edward Snowden points out all the time, the networks of the world are listening to us all the time. And now, especially with AI and the fact that we are, for instance, OpenAI's product, right? Like so many of their models are free, but in order for them to be free, we have to train them with our data, right? So, and we all know they're listening to us. We talk about things, and then all of a sudden we get ads for those very same things we were talking about. So I think with this larger conversation of the police state or the fact that they're listening to us all the time, I think that if Solana's phone is protected from this somehow, that could be very interesting. And I don't know enough about the phone to say that here definitively, but if this interests you, let me know in the comment section, and I will make a video, a deep dive strictly on Solana's phone, so we can get into the nitty-gritty of how safe we might actually be and how safe our data and personal information might actually be on these devices. But anyway, moving on. The point I'm trying to make with all of these points about Solana is that it seems they are set up strong for the long run. And excuse that long babble. But anyway, now let's move on to the third blue chip token that I absolutely love, and I'm sure many of you watching also love. And if you don't, well, then here you go. Okay, the third blue chip token I want to bring to you today is Chainlink. Chainlink is the plumbing, okay? It's the infrastructure that lets blockchains talk to the real world. They are oracle or communication tech. And this tech that Chainlink created, it brings in prices, interest rates, index levels, and moves data and value across chains. And if tokenization is the idea of putting traditional assets on chain, Chainlink is the toolkit that turns that into something banks can actually use. And the biggest step here is the Chainlink runtime environment, known as the CRE. You can think of CRE as an operating stack, tech stack, where institutions can run tokenization, settlement, and compliance workflows across different chains. So it's not just this random concept or theoretical concept. It is already in pilots with names like Swift, Euroclear, UBS, JP Morgan's, Kinexi, MasterCard, cloud providers, and DeFi projects. And that list tells us where Chainlink is headed. Global Finance is testing Chainlink as standard infrastructure for the tokenization wave. And then we have CCIP, connecting regulated money. All Unity, backed by DWS, Flow Traders, and Galaxy. They chose Chainlink CCIP to move its MiCA-compliant Euro stablecoin, known as Euro, EURAU, across multiple chains. And their goal is a regulated Euro payment rail that works for exchanges, tokenized asset platforms, and European banks with a unified cross-chain settlement layer. So now you have regulated Euro money in Europe using Chainlink for cross-chain movement and transfers. And on the public sector side of things, Banco Inter and Chainlink completed a real-time cross-border trade settlement trial between Brazil's Drex CBDC network and Hong Kong's Ensemble platform, working with the central banks of both regions. Two central banks and a major commercial bank ran a real-world trade finance experiment with Chainlink in the middle. That is exactly the kind of proof point you want to see if you believe in tokenization as a long-term theme. And to cap it all off, Grayscale released a report calling Chainlink a critical connective tissue between traditional finance and crypto, and described it as an essential infrastructure for blockchain-based finance. So in a blue chip context, Chainlink is doing exactly what it should be doing. It keeps stacking serious integrations. It focuses on data, messaging, and cross-chain movement. It shows up in stablecoins, CBDCs, and institutional tokenization pilots. And that leads directly into the next project. Because once you have rails for tokenized assets, the next question becomes, who is building the markets that run on top? This is where Ondo comes in. Ondo is building products and rails for tokenized real-world assets. Think tokenized stocks, ETFs, and treasuries. that live on chain but sit inside real regulation and real market structures. And one of the biggest moves recently was Ondo's acquisition of Oasis Pro. Oasis Pro is a US regulated digital asset broker dealer and alternative trading system. So by acquiring it, Ondo brought a broker dealer, an ATS, and a transfer agent license under one roof. That means Ondo can now issue, trade, and service tokenized securities inside the US regulated perimeter. And that is exactly the kind of setup large allocators want to see before they move serious size on chain. And in Europe, Ondo Global Markets received approval from the Liechtenstein, did I say that right? Liechtenstein FMA to offer tokenized US stocks and ETFs to retail investors across the European Economic Area. Around 30 countries, around 500 million people in a MiCA-aligned framework. So this turns Ondo from a cool RWA or real-world asset idea into a platform that can sit in front of hundreds of millions of retail investors with tokenized US equity exposure. Then they added distribution. Ondo launched over 100 tokenized US stocks and ETFs on BNB chain and quickly attracted significant TVL and volume. And soon after, they integrated with Binance Wallet, which means hundreds of millions of Binance users can access those tokenized assets through an interface they already use. For RWA projects or real-world asset projects, distribution is the bottleneck, which it always is, we know. And Ondo is plugging straight into one of the deepest retail funnels in crypto. And on the yield side of things, the team put $25 million into Figure's SEC-registered YLDS stablecoin to strengthen OUSG, their tokenized short-term US Treasuries fund. It's a mouthful, I know, but YLDS is backed by treasuries and repo and routes yield in a regulated way. That's important. This kind of a move signals a focus on durable, compliant yield instead of short-term token rewards games. And looping back to Chainlink, Ondo made Chainlink its preferred cross-chain infrastructure. It's like two of my favorite blue chip tokens having a baby. Both projects are now part of initiatives with players like Swift and Euroclear around tokenized assets and corporate actions. So in the blue chip basket, Ondo looks like a full stack bet on tokenized markets and licenses in the US, passported access in Europe, and deep distribution through Binance and infrastructure alignment with Chainlink. And now let's talk about the new beta play, or the new project that I have been watching closely lately, and that is TIBBIR by Virtuals. We just went through 4 names that I treat as serious long-term builders. Now this last one, TIBBIR, is what I would consider higher risk, so know that, but it sits right at the frontier of 2 very important industries, and that is AI and on-chain finance. And I think it is well worth understanding. It is called Ribbita by Virtuals. The ticker is TIBBIR. And Virtuals, for those of you who don't know, is building a world where AI agents can operate like on-chain businesses. And I actually helped launch Virtuals. They had a different name at the time. And this was at least 2-3 years ago, back when I was the CMO for one of the top launch pads at the time called Paid Network by Master Ventures. Anyway, I helped launch them, and it's amazing to see how far they have come. And now they have co-created this new project, TIBBIR. And as I was saying, Virtuals is building a world where AI agents can operate like on-chain businesses, right? And that's the future we're all moving into. AI agents will be able to pay for services, trade, handle tasks, and settle with other agents. And all of this will be done on-chain through Virtuals with clear records. And TIBBIR is the token that powers that ecosystem. Interesting, huh? And since its very cryptic launch since January, TIBBIR has delivered lifetime gains above 10,000%, hitting an all-time high around 40 cents and reaching a market cap in the hundreds of millions of dollars, with the full 1 billion supply already circulating. So it has already been recognized as one of the big winners of the AI meme wave this year. Culture picked up on it too. In November, Beeple dropped a new digital piece that included TIBBIR's price chart. And when your chart shows up in a Beeple artwork piece, you immediately reach a much larger audience across NFTs and crypto art. And around that time, TIBBIR's market cap and volume were both strong, and the whole Virtuals coin cluster saw a sharp move. CoinMarketCap's deep dive on Ribbita by Virtuals frames TIBBIR as infrastructure for AI finance. It talks about AI agents using TIBBIR for micropayments and autonomous transactions, with backing by Ribbit Capital and integrations with cloud providers like AWS and Databricks. And that narrative matters. It gives you a clean way to think about TIBBIR as more than a meme. It becomes a bridge between AI agents, DeFi, and the real world of commerce. And one of my favorite moments was the CryptoPunk event. In July, the Ribbita AI agent bought CryptoPunk 9098 for 89 ETH with minimal human input. That made it the first AI agent widely known to buy a punk on chain. Now, you could debate whether it overpaid. That part still needs to get worked out, right? Good negotiation. But what you cannot ignore is the visual, is what it says. An AI choosing and buying a blue chip NFT with on-chain money. It proved its use case. And that is exactly the kind of story that sticks when people try to understand AI as an economic actor. Around the token, you also have Ribbit, a frog-themed NFT collection that has become the visual identity for the community. It is community built, and you already see wild behavior like a rare one, Ribbit, selling for several ETH, while the floor sits much lower. That is the kind of early cult energy you see around strong meme ecosystems. And recently, price has pulled back from the highs. And at the same time, on-chain data shows smart money wallets on Base still holding TIBBIR as a top position and adding during dips. Now, that does not guarantee anything, although it does tell you informed players still see an interesting setup. So why did I want to bring TIBBIR into this episode? Well, it's because it sits where several important trends intersect: AI agents, on-chain commerce, strong culture, and early smart money interest. And unlike many AI narratives that only live in pitch decks, this one already has a live agent that bought a punk and a token that has been battle-tested in the market. So for me, that combination is interesting enough to keep watching closely. And if you look deeper, some of the same investors behind Revolut and Robinhood are behind TIBBIR as well. So to me, that is probably one of the strongest indicators of TIBBIR and Ribbita doing well in the long run. So as we wrap up today's video, I hope you gained value. And I wanted to bring you this video. I know it was a little long, but I wanted to bring it to you because many of you have been asking me for my top blue chip token plays, what I'm holding, which blue chips I believe are going to perform well once the market pumps. So I thought it was important to end the week with a video like this that shows us where we could be allocating extra dry powder or whatever we have on the sidelines, or repositioning ourselves, or if anything, this video could serve as validation to you on what you're already holding, since I believe I essentially covered the best blue chip tokens in crypto right now. And it's important because prices can move up and down all day. But what ultimately matters over the long run is which projects keep stacking real usage, keep building, keep rolling out new innovation, new partnerships, real regulation. Because we all know that our real edge as investors comes from paying attention to what's to come and not just the daily noise. That's a recipe for confusion. You should know what you're holding and be nice and steady. This is not a trading channel. Once again, if you want that, go watch someone else. Okay, I'm a fundamentalist, I'm long-term minded, so that is what I bring you here. So if this episode helped you see these names with fresh eyes, Then let me know in the comments section which projects you feel most conviction on after all these updates, and which ones you want me to do a separate deep dive on. Anyway, I love you guys so much. That's a wrap for videos this week as well, and I will catch you guys here on Monday.